IBM is the world's largest technology services company, and it's in transition, selling businesses such as low-end servers, cash registers, and semiconductors to focus on high-growth areas like security software, cloud services, and data analytics.
Exactly, that's well put. So it's doing the transition. The transition hasn't been an easy one, though, in terms of the quarterly reporting. We'll see in a minute, but the share price beginning to look like it's sort of turning the corner.
$153.6 billion in terms of market cap, a PE of 12.9 and a dividend yield of 3.5%. Here you've got a stalwart of the technology industry trying to change the name of its game effectively.
Yes, but I think IBM's also a company that's always been in transition. I mean, this is a company that's been around for 100 years and has consistently managed to transform and reinvent itself, and I think is doing a good job. And for us, I mean, we also hold this in portfolios. I mean, the real excitement for us is that you're getting a company that really, I think, has the same kind of opportunities that a Google has, except you're getting it at a third of the price. I mean, on a PE of 13 versus a 30 on Google, I mean, it starts to look like it has a significant margin of safety for any downside that the market might
Just to push you on that, you believe it's nimble enough to refocus, re-strategize without losing too much momentum?
No, I don't. Yeah, again, at the moment, I suppose that if you look at the share price, the momentum has been coming off. It's had a very good year this year.
Yeah, we're looking at it there. Yeah. So 5-year chart doesn't look so grand, but you can see it's bounced hard from around $100 to $160 in the last couple of months.
And I think that's also some guys rotating into companies with the marginal safety. I mean, remember this is, I think Warren Buffett owns about 8% of IBM at the moment. It was his first tech play ever. And if you look at
the lower levels there, did you buy more?
Yeah, absolutely. Yeah, I mean, we've been filling up. It's a new holding in our portfolios, but we've been sort of filling up from probably I'd say November last year. But again, you look at what they're doing. So they're going into obviously cloud computing in a big way, security, and you've got to remember things like Watson. So deep learning, computer intelligence that's already being used in hospitals. And really, if you can speak to, I mean, Watson, I don't know if you read up on it, it's fascinating. But I mean, it managed to beat humans at Jeopardy, and it's really a question-answer system. I mean, that could literally replace call center agents across the world, with one piece of software. So I mean, very, very exciting stuff.
Terrifying the impact that it could have. The negative side, obviously, on jobs.
On jobs, yes, but for IBM's profits, definitely a massive upside and more efficiency. I don't think you can be afraid of technology, and these guys certainly aren't.
Well, you own this in your international portfolio?
Have never owned it. Generally been a bit of a laggard, and it's only recently this seems to have woken up. Look, the core of the business is big ticket consulting revenues. So they service banks, they service large government enterprises, like run the tech behind the Electoral Commission here in this country, that sort of thing. And they win those contracts because they have massive global teams, massive expertise, and then they key in that AI, artificial intelligence, Watson backend, that they can do analytic work on your data in order to help you design productivity solutions. But the problem is that the earnings haven't really spoken to that opportunity. And the question is, has Gino Rometty, the CEO, done enough now to actually say, look, decisively, the forward trajectory is up? The market is sort of beginning to believe that, and the PE is ticking up higher slowly, but I don't know if we're quite there yet. For me, it still feels like there's a transition going on.
We have to call it. Do you want to counter his argument here?
No, I think it is hot. I take Paul's point. I mean, it is one that, I mean, if you look at a peer analysis, you'd compare it to an Intel or a Cisco rather than a Google. But because it's shifting out of that more hardware-focused business into the higher margin software products, I think, you can see significant, multiple expansion, without, necessarily seeing a huge uplift in earnings. I think also that one of the reasons that it gets, marked down, in multiple terms is because it hasn't managed to grow its revenue. So if you compare it to Google, who's growing at 20%, IBM has sort of flat revenues, and I think really that's the worry. But this company, if you look at it in terms of revenue, in terms of employees, this is 5 times the size of Google. The only reason its market cap is so much less is because of its multiple.
Difficult not to agree with Gary.
And you make a lot of money in the market when there's a period of PE expansion. So what that means is where a company goes from being somewhat dimly viewed to being regarded as a growth company.
This is a re-rating effectively.
In general, exactly. But the point here is, as Gary says, is that we haven't really seen revenue growth from these guys. What we're beginning to see is margin improvement as they scale down certain businesses. I'm going to give it another 6 months. Thank you very much.
Not
I'm
hot?
going to say not hot.
It's hot, right.